Hey traders, it's Greg from Trade90X and hope everyone is having a good weekend. Welcome to the Trade90X weekend breakdown. I really enjoy doing these, breakdowns. It really helps put clarity to what's going in the market, and hopefully you guys are getting value as well. And always, if there's any topics you want us to cover, or if there's anything you don't understand, hit us up at hello@trade90x.com. So again, whether it's the weekend, whether it's the lessons, whether it's the pre-market, it's the same process. We are sticklers for process here at Trade90X. Either do it right or don't do it at all. Okay, and remember, trading is not easy. Okay, you need to put in the work and understand what information you need to focus on. Always, Trade90X will help you build that foundation in the first 90 days. That's what we call it, Trade90X, get trade feed in 90 days. And then also we will always continue to provide support to make sure you move from the learning phase to making money. Anybody can do this. It's really up to you if you're willing to do it, others or not. The other thing I also mentioned, always talk with your financial advisor or accountant before risking capital. And also make sure that you have at least 6 months of emergency funds before you risk any capital. So if you don't have the 6 months of funds, what you're going to do is spend that time. You're not going to wait. You're going to spend that time during that 6 months building your back-tested, proven statistical edge plan. So before you trade, and again, the reason why I go through this every morning, every weekend, is I want to embed in you is that anybody can do this. Listen, trading's not easy, but anybody can do it. But you need to understand the rules of engagement. And this is why I'm a stickler for process and information. So again, before you trade, understand how the markets work. That means you've gotten educated. Understand what type of trading suits your personal time and resources, not somebody else's. Mastering risk and money management. I talk about it. Listen, I go through the same thing every day, and I do that for a reason. Here at Trade90X, and again, for active trading, we only risk 1% of our account per trade. We don't risk more than 3% a day. We use 2-to-1 risk reward for target one, and we have very clear defined profit and loss goals that fit within that total of 3% per session. Are we clear? We also never trade unless we have a back-tested plan with a statistical edge. That means you've been in the sim trading a minimum of 50 to 100 trades, and you prove that you can execute your process and build a statistical edge. You understand how to journal and review your trades. You understand the importance of routines, meaning your pre-market is to build the plan, live market is to execute, post-market is where we do our journal and review how we did in the session. And again, the importance of accountability, importance of participating in an experienced mastermind group like Trade90X or any other group. Again, this is where you're gonna, be around people that have done it, trade real money, and where you can ask questions. This is where you're gonna expedite your learning curve. Never focus on what other traders are doing. Focus on your own journey. Never follow never follow, create your own plan. And again, this is just rinse and repeat every day. Again, I'm going to talk about this every day until I'm blue in the face, because this is what it's going to take between somebody who has success and fails. It's that simple. Now, let's get right to it. We're going to look at some of the data. We look at the charts. We break down the charts. Ultimately, the charts are going to be the final result. And then we have our game plan going into Sunday, Monday, depending on what you trade. Okay, so let's go jump in and let's go check out what the data and the charts tell us so we can build our plan and get ready for Sunday or Monday, again, depending on what asset class you're trading. Now, here at Trade90X, we trade futures and options. We are opportunistic traders. We will swing trade, we'll position swing or day trade, and we usually trade the same symbols, mostly the indices, maybe a little Apple, oil, gold. We keep it simple, less is more. Okay, so first thing I always want to do is I want to check the calendar. Hold on, let me apply the filter right there. So coming into next week, we're in the last week now of June. It's amazing. We're going to hit July already. Incredible. So if you're not getting the results you're looking for, then you better hit us up at hello@trade90x.com. There's still plenty of time in the year to make that change. So again, we are robotic in our process. News. Again, I'm looking for the important news here, orange and red. Again, Tuesday, you've got consumer confidence, new home sales. You've got Fed speaking again on Wednesday. You've got final GDP, unemployment claims. You've got core PCE. So important news again this week. So again, with news, As I say, we don't trade into news. We let the news come out. Again, our goal every day is the same. What is the market context? Who has control? Is it obvious? And identifying the decision points that we want to trade in this symbol and time frame. And when price gets there, if we get our confirmation, we're ready to trade. We don't chase. We don't FOMO. It's that simple. Now with news, hopefully all news does is it moves price to our decision points that we're looking to trade, that we built in the pre-market plan. And if we get our confirmation, we're ready to trade. Are we clear? Excellent. So first things I'm looking at, fear and greed index. I just want to understand the sentiment before we get to the charts. Right now, as I mentioned, and I do every day, when we get to these extreme areas, this is when I start perking up. When we're extreme fear, I'm looking for potential moves long, extreme fear, potential shorts. Now, we don't know if this is going to mean we're going to get a change of trend. It just means that I'm looking for pullbacks. And a lot of times I'm looking for that move back to the middle, back to neutral. But again, everything is all depending on the charts. And we'll talk more about that when we get there. Now, next, barchart.com, another great free tool, market momentum. And I'm looking at here, how many stocks are above and below their 50? Again, I'm looking at the breadth of the market. Again, this is things that money managers use, hedge funds, smart money, banks, institutions, hedge funds. And again, right here, we're above 52%, but look at what's been happening the last week or so. Momentum has been declining. So we just need to keep an eye out. We're still above 50%, but time to pay attention to that. All right, next. Now, if you give me two pieces of information only, give me the S&P, which represents 75% of the market, and give me the sectors, 1 day, 1 week, 1 month for active trading. Now, 1 day doesn't make a trend, but what I'm looking for is that confluence. The same one where we drive. Is it green? Is it red? Or is it yellow? So basically, when we're green, all three, that gives me the confluence. So if we have bullish S&P, and all these are green, then that tells me I've got a high probability to go for a swing trade more than just a day trade. If these are all red and the S&P is bearish, then that tells me I can look to be short on my swing trades more than just day trading. And if we have back and forth where it's green and red, green and red, green and red, then what that tells me is indecision. So right now we're definitely a little bit more bearish. The monthly is still bullish, but we're definitely starting to see some bearishness creep in. So when I see that indecision, again, for us, again, we're going to look at the charts and see what the setups are. But mostly when I see something like this, we'll be leaning towards our day trading strategy. Last thing I want to be doing is taking anything longer than a day if I don't have that confluence that I'm looking for. Okay. And the key word is that what I'm looking for based on the information, not what somebody else at CNBC or other YouTube channels. It's what I see in the information. Are we clear? Good. Now, every Friday, the commitment of trader report comes out, and this site, tradingstore.com, does a great job of doing all for free. And you can see all the symbols it has. Now I gravitate, and again, I would recommend looking at a few of the symbols that make up the market pulse. But again, I gravitate right to the S&P, and what I'm looking for is the inflows and outflows, but I'm looking at where the smart money is. And again, when someone says smart money, all it means is it represents 85% of who control the market, the banks, hedge funds, asset managers right here, institutions. And again, I'll say it again, I don't care what CNBC says or people on YouTube. This tells you everything you need to know. 77% are long versus 22%. So what that tells me is that dips can be bought on the bigger time frames. Now, that doesn't mean that we are not going to have some short opportunities in the short term. All I'm telling you, until I see a personality change in the S&P, I have a confidence that the dips can be bought. And until I see otherwise, again, I don't need to listen to what CNBC or anybody on YouTube, and you should be doing the same. All right, one more thing we're going to look at before we get into the charts is stockcharts.com. And I love they've got these predefined views of the symbols I want to see quickly. And what I'm looking at is, I want to see the Dow, S&P, NASDAQ, the Russell. I want to quickly see the 10-year bond, the dollar, the VIX. Here's also the advanced decline line, and then I'll have gold, oil, and commodities. And for me, this is a good representation of the market. And again, I always start with the S&P, but again, the more confluence that we have with the four indices, the better. Now we don't. I mean, we can see the S&P and NASDAQ have been running. Dow has not been quite as bullish. It looks like we're trying to get back into that range area that we were. Okay, and the Russell, same thing. We were in, you can see the swing high to low. We broke out, but it looks like we're trying to come back in. So definitely weak. Advanced decline line, you can see, is definitely now towards the bottom. Now, the one thing that I always look at is I always want to see what the VIX 10-year and dollar. Now, if these are all coming down, that is definitely bullish. So the more confluence we have with those three, with the indices, and we can see that the 10-year and dollar are kind of, in a range. Now, the VIX is still low volatility. Now, why is that important? Because, again, I want to know levels of volatility, because low volatility means definitely more bullish. There's bullish sentiment, and also the volatility is low. If we're in the low, above 20 and above, it's more moderate. And we start getting high 20s, it's higher volatility. We're starting to get fear in the market. We don't have that. So right now, what this is telling me right now, and again, we'll see. Now, remember, I was away for 3 weeks, and what I talked about before was ranges. Now, for me, I'm always looking at rule of thirds, and we were at 3,800 to 4,200, and I talked about this for weeks. And now, what we do with ranges, we break it into thirds: bottom, middle, top. Bottom gives me the highest probability if we get the price action for longs. The top of the range, if we get bearish price action, gives me the highest probability for shorts. And the middle is going to be kind of a 50-50. It's going to be the most unpredictable. Now, as when we break out of a range, we measure the range from high to low, and I'm looking at range expansions, whether it's above or below 125, 150, and 200%. We're actually at 150% right now. So not a surprise. We're getting a little bit of a pullback. So we'll wait and see. But right now, all I can tell you is that we are definitely still bullish. There's definitely a little bit of cracks happening because the Dow and Russell are weak. The S&P and the NASDAQ, for me, these are still just pullbacks until we see something deeper. Now, we get back into that where we were, 38 to 4,200 on the S&P. We start moving back into that range, then I'm going to be looking for potential rotation back down to that, 40, 3,800. But right now, we're still above the range. So we are still... the bulls still have the edge in the short term. And again, we'll look at the chart. So now that we've got that data, let me just, again, what did we do? We looked at the news. Okay, we looked at the fear and greed index. Bulls definitely still have the edge. Right here, we can see momentum is waning. Here, we can see momentum is waning. And again, there's definitely some pullback going on. So time to pay attention. We know the longer term trend, our main trend is still bullish. So pullbacks definitely still have that confidence to look for those pullbacks. And then when we see here, again, we're starting to see, some pullbacks in the NASDAQ here. The Dow's a little bit more pronounced. So is the Russell. I don't see the 10-year and dollar rising, but I also don't see the VIX starting to move up yet either. So again, we'll do what the charts tell us. Right now, I'm starting to see a little bit of indecision, so I'm going to be leaning towards our day trading strategy, but the charts will tell all, and I'm going to show you how we break down the charts. Now, if you've been watching our pre-market weekends, you know how we do it. If not, you're going to see it again, and if you're new, welcome. But I look at every chart the same. I don't care. Now, I always start with the S&P because the S&P represents 75% of the market, but I don't care if this is Bitcoin, Apple, futures, Forex. Again, if it has liquidity, we can chart it. So the first thing I always do, I don't care if you're a position swing or day trader, you need to understand what the main trend, intermediary trend is doing, but also in that time frame, are we bullish, bear? Oh, wait, listen, you have to master, are we bullish, bearish, or in a range, or I can't figure it out. Now, bullishness right here is lower left to upper right. It's plain and simple, higher highs, higher lows. You see, we made the pandemic. Beautiful bullish leg right here, momentum. The stronger the momentum legs, okay, the more likely we're going to get a move up. And you can see we had a pullback, which is not even, it's about 38 to 58%. It's a shallow pullback. And then we went into a range that 38 to 4,200, and now we're breaking out. So the main trend is absolutely bullish. And then we start breaking down the intermediary trend. And again, this is what I do, whether I'm position swing or day trading. And again, so I break down the intermediate trend is anywhere from your 15-minute to your weekly. So then I go to the weekly chart. Now, the weekly chart is going to be something that I usually look at for longer term position trading. Now, these are the ones I'll be looking in for weeks, months, and years. And again, what I'm looking for, same thing. Are we bullish? Are we bearish? Or we starting to be bullish, and you can see we're starting to make higher highs again and higher lows. We broke out of the range. So I'm going to show you each time frame what I'd be looking for. So if it doesn't matter what symbol this is, but on the ES, here are the trades that I would look at on the weekly. So we're at this top right now, this 150. If I get a double top, I could look for a counter trend trade pullback back to the top of the range would be a trade I potentially look at. We're not there yet. Another trade I'd be looking for is again, and I don't care if it's a 1 minute or a monthly, when I look at charts, when I'm looking at my charts, I don't care if I break above a level or below it. If I break above or below, if I break above, I'm usually looking for a 1 or 2 try at or above what was resistance now became support. And then what I'm always looking for in bullish trades, I must have support. I'm looking for bullish engulfing, bullish pin bars, and double doji candles. That's trade number 2. Trade number 3. Again, we come down here, we double bottom, we reject, we get the bullish candle. I'm looking long. And then the 4th trade I'm looking for on this chart, and this is how I break down my charts. Again, momentum. What was support becomes resistance, 1 or 2 try. And then I'm looking for, again, on bearish trades, I'm looking at rejection off a resistance. A break, retest, rejection is what I look for on my bullish and bearish trades. On the bearish trades, engulfings, shooting star, double doji, red, and I'm looking for a short. So those would be the 4 trades. And then what I do is I set alerts. Okay. And then when price gets there, I either get my confirmation or not. So while I'm waiting for that, I can now do a little bit faster swing trade on my 1 hour to daily. So here's your daily chart right here. And then what I'll do is, again, I'll move to the 4 hour. But again, the most important thing is we have our levels right here. Now, the nice thing about TradingView, just right click, and you can move any one of these levels. I always look at my levels and that weekly and monthly, and I bring them into my other. All right, so now for my swing trading, I'll look at usually the 1 hour to 4 hour for faster swing trades. And then all I'm trying to understand is, are we bullish, bearish, or range? Now, one other odds enhancer I do use is I like using market profile. These are monthlies, and these are weekly actually right here. Point of controls. And what the point of control is keep it simple. It's not complicated. It's just where 70% of real volume orders took place. So for me, those are very important. And again, as we're bullish, you can see the POCs are rising. And when we're bearish, you'll see the POCs moving down. And if we're in a range, you'll see equal highs, equal lows, like over here. You see this? Equal highs, equal lows. So if you don't master what bullish price action looks like, bearish or ranges, you're never going to have success. Okay? We know that this was bullish. It was higher highs, higher lows. But now we can see we broke and retested right here, and we broke and retested right here, and we also just came back down below this POC. So what are the trades now I'd be looking for if you're not in a trade right now? So for me, these are the trades I'd be looking for. Rejection or trap high right here to short. Again, resistance and then getting the entry candles would be one trade. Second trade would be down here. We reject. I'm looking back up. That's number 2. Number 3, we get back above here. 1 try, 2 try. What was resistance now became support. And then I'm looking back up to the highs. And then the other trade I'll be looking for is, again, momentum, the break, retest, rejection. I'm always looking for some kind of break, retest, rejection on key levels. And for me, key levels are things like point of control, because they represent where real volume took place. Okay. Now, the other thing I also use is I like using pivots. And these are also weekly pivots that I'll use on the 4 weeks. So the hourly and 4-hour is a great chart for me to a little bit faster. Now, I'm going to show you even something even faster. So if you're like us at Trade90X, we are, we will swing and day trade. We also position, but again, for active trading, that's, we're looking at our swing trades. And I created something called the Trade90X for context situation strategy. And what it is it's just using one chart. Because I had a lot of people come to me, listen, I want to keep it simple. I want to use one chart. Can you give me quick steps to do it? So, okay, so pay attention. So what I did was I'm going to show you the steps. But before I do that, let me show you the predictive, not lagging tools that we use at Trade90X to quickly determine whether or not we're bullish, bearish, or neutral. Okay, because that's critical to know, are we bullish, bearish, or in a neutral phase? So I used the previous day's high, low, the midpoint. I used the previous day's close right here in dotted, and I used the 5-minute open range in red. And then also I used the weekly high, low in purple. And then the monthly high low, I can't see it here, it's being covered by the yearly. Here it is. And then I use the yearly high low. And the reason I do that, again, is because these levels are predictive, not lagging. They quickly tell me the story. Are we bullish, bearish, or neutral? Which I'm going to, once you understand this, I'm going to run through a bunch of symbols. And I have four very specific rules: context 1, context 2, context 3, and context 4. Let me tell you what those are, and then we're going to go through the steps. So context number 4, I'm going to start with, is when we're not sure what's going on. It's where we have, you'll have something like, something like this. You'll have some volatility or tight, choppy candles. And basically, to me, I call this context 4. When we see context 4, we do nothing. We sit on hands. We basically sit on hands, and we're looking to wait for context 1, 2, and 3 setups, or we're going to go to another symbol that we see obvious context 1, 2, and 3 setups. Are we clear? Good. Now, what is context number 1? Context number 1 is when we have obvious and clear bullish or bearish price action above the previous day's range. So it'll go like this. So you have obvious price action. Wait, hold on, I don't know why it didn't stay, but you have obvious higher highs, higher lows. And what I'm looking for is those trap lows back here. So we broke here. Now we're looking back for support, and we're looking for the continuation trade up to the next key level. All right. So that's context number 1, bullish. If it is not obvious, then I am not trading it. Below the previous day's range, it's something like that. And the same thing, we're looking for that pullback trap high to short back down. Now, when we're above and below the previous day's range, that's the only time I'll even consider a trend trade, because that tells me we've got that bullish bearish momentum outside day. If it is not obvious and it is not an outside day above or below, I am not even considering a swing or trend trade. Anything that's inside, I'm going to show you context 2 and 3. These are what we call neutral days. They're inside and they're fade trades. Okay, so let me explain. So context 2 is when price is inside the range, and we're looking at, it's the rule of thirds. It's the ranges, bottom, middle, top. So when we're at the top third, if we get our price action like right here, I am looking to short. Now, when I do this strategy, again, I'm going to show you the steps in a second, but I need you to understand everything. My anchor chart will always be, a 10, 15 minute or 60-minute chart, because I always need to be able to see the context. Okay. A lot of times what people do is they'll use like a 1-minute chart and they get lost in the forest. Now, I don't care what candles you use. You can use range, tick, Renko, time. If you don't understand the context the way I'm showing it, you're going to make a low probability trade. So context number 2 is when price is inside the range, and our favorite trades are going to be is when we have bearish price action at the top third off resistance, and at the bottom third when we have bullish price action off support. Are we clear? Now, this would be a good example right here. Now, Context number 3 is this right here. It's beautiful. Doesn't get any better. See how price came? So you notice how right here price came and we didn't get this price action below the previous day's low. Remember, I said that's a trend trade. Well, a lot of times what will happen is price will go above and below and then go into a range. And many times what will happen is we look for the break and retest, for a reversal, or we get the continuation. But look what happened here. Price came below the range. We thought potentially we had an inside day to an outside day. And then look what happens. You got this beautiful momentum here. 1 try, 2 try, take your pick. And we call this context number 3, fake out, breakout. It's when price is moving strong or moves above or below the previous day's range, but then comes back in, and then we're looking for momentum, break, retest, rejection with our candle, as I talked to, at the previous high and low. Now, if the range is wide and you've back tested your plan in the middle, now here's the thing. I do not trade you. We talked about our risk parameters. Number 1, our trades typically are 1% risk of our account, no more than 3% per day. That gives us 3 trades per day. We look at target 1 at 2 to 1. Okay. Now, our favorite trades are going to be context 2, top third, bottom third, fake out breakouts at the previous day's high and low, or if price breaks back above or below into obvious trend where we can take a trend trade. Now the middle, again, if we have 2 to 1, so here would be the trade right here. If you've back tested, because remember, we don't allow anybody in our community to trade unless they have proven back tested results, that they can prove that they understand how the markets work. They've proved that they can execute the plan and the setups. They understand and they've built a statistical edge, and they understand their risk management. So for us right here, every trade has to have 2 to 1 space, and we don't. So right here, it's close. So now our stops typically are structured stops. We look left when we're shorting. We want to have a level and be above the candles. When we're below, I want to be below a level and the candles to the left. And we take our entry and stop, and that's how we determine whether it's an option contract or futures. Really, it's going to depend on the size of your account. And again, that's a whole separate video. But right now, I'm showing you right now, this was what we'd call a judgment call, because when I don't have space of 2 to 1 to my target 1, it's not a trade that I like to take. Now, I do like the setup because we did get this. Let me show you. We did get this. Look at this. You got momentum, 1 try, 2 try, beautiful setup. I mean, really nice setup. But again, this is something that you got to back test. And for me, I can just tell you that the middle is going to be less predictable. And if you don't have at least 2 to 1 there, again, it's not going to be the highest probability trade. So now, ES started in a context number 2, came back down, had the middle overnight, and then during the US session, gave you potential here. But again, if the middle is not part of your backtesting strategy, no. The best trade of the day, and again, we don't know what time that's going to come on Friday, for me, came right here. And this was right at the European close right here. This right here. We had the fake out breakout, boom, momentum, and then right up there. Really nice trade. Okay. Now, what are the steps? First thing I'm going to do, because again, I created this because for me, I wanted to have very simplistic. And again, I know it takes a minute, but if you've been watching me, I do this every day. So this should be sinking in if you're watching my videos. Now, what's step number 1? Step number 1, we're going to go to the weekly and monthly on one chart. And what I'm looking for, let's empty this out. So what I'm looking for is I'm looking for pauses where price paused. Right here, see how price paused and then took off quickly. Price pauses and took off quickly. Price pauses and took off quickly. So I only want to do the most immediate right here. So then I'll go back down to my anchor chart, 10, 15 minute, And then again, you can trade whatever you like. I like to usually trade, a 1 to 5 minute. I'll have my, hourly with my 10 or 15 minute chart, and then I'll have my, say 1 to 5 minute chart. But again, if you don't understand the steps in the context, you're going to be lost in the forest. So step number one, what was we know that the main trend was up. Okay, we put in the decision points in the bigger time frame, and what I suggest you do is you just color code these. I know that they're thicker black, so I'm okay. And then what I'm looking for is here, see this yellow line? This is the weekly line. This is where the week started, and you can see the days. And we can see the week before we were bullish. We had a blow off high, and then look what happened here the whole week. We basically had a trend line in place the whole time, and we're making lower highs and lower highs. Would you agree? I hope you said yes. So right now, in the short term, again, remember, we're active traders here. So the first thing you're going to ask is, okay, I showed you step number one. Step number two, I asked what is price doing over the last week? We identified that. Number three, where is price in relationship? When we came in Friday right here, where was price in relationship to the previous day's range? It was an inside day. Remember what I said, context one is when we're above and below. That means we can have a trending day. Now, if say you're not a swing trader, you would just day trade it. Now, do we have context 2, 3, or 4? Remember, context number 4 is when we are kind of in situations like this. We're not sure yet what's happening. There's no edge. Okay, like right here, there's no edge yet. Okay, this is context 4, and we basically sit on hands. Context 1, you know what it is. Context 2, we're looking for bearish price action off resistance in the top third. Bottom third, we're looking for context 2 bullishness in the bottom third off support, and we want it obvious. And then context number 3, I want obvious fake out breakouts. If it's not obvious, if I do not have obvious momentum, obvious price action in space, you do not trade. And again, this is why we are so sticklers for process here at Trade90X. And this is why we make everybody go through in that first 90 days, the back testing, proving that they understand how the markets works. You understand the process, the setups, the risk management, and then you're building that, you're building that confidence. That's the only way to build confidence. I hear all these people read books on psychology. The only way to build curb your emotions and psychology is to do. Okay, I've been building companies for 25 years, and I bring that, that expertise. That's why trading resonated to me, because if you don't understand risk management in business, especially trading, you're out of business day one. All right, so now that we understand that, what did the ES do? Basically, ES was a neutral day. So overnight traders got a gift. If you trade the middle, if the middle is something that you don't mind trading, then this was a beauty. But again, that was at 3:40 in the morning. And really, we didn't quite get that. We didn't quite get that. Now, one other thing that we can add that I like to add sometimes, I'm going to put it on here. Sometimes I like to use camera pivots. I'm going to show you real quick. And what I like to do is just use R3. I like to use the pivot S3 R3. Now, what it does is it acts as a neutral area, R3 S3 pivot. Above R3 tells me we're bullish, below S3 is more bearish. So quickly it allows me it tells me, and also remember all these levels, what's great about them, they act as, potential support, resistance, supply, demand. I call them decision points. That's all they are to me. Either get the confirmation or not. So we're below it, so that confirms it. We're below the trend line. I think it's obvious, but we had two really nice setups right here. Now, this was a fake out breakout, but what you need to understand also, and again, I'm just because I want to make sure you get this, and I'm going to run through this right here. Do you see the middle and here you have the trend line? You need to understand that this is counter trend to the week, just so you understand. But I do like the setup. I do really like the setup, and it's not a surprise to me that we didn't even get above here, okay? Because like I said, if we would have gotten above here, if this would have done this, then we'd be going up higher. But anyway, this is where putting in the time, with our process at Trade90X, using the back testing, using the routines, using the journal, asking questions. This is how you become a trader quickly, and you're ahead of 99% of the traders because you're doing what other people are not. Now, again, I understand sometimes these videos get a bit long, but again, I'm giving you $1 million stuff here for free. And again, hopefully you're taking this and looking at it and going, this really makes sense. I'm getting value, and ask questions. Remember, how many people offer that to you? Just hit us up at hello@Trade90X. Now, let's go through a bunch of symbols now. So NQ, I'm going to get rid of them. Let's go. What's step number one? Step number one, we go to the weekly. What is price doing? We know it's trending. Where are the areas where price basically paused and moved away quickly? These are just potential decision points. That's all they are. Okay, they're not holy grail, but again, you'll be amazed. I'm looking how price reacts on them. Then I go back to my anchor chart again. So we know we've got the bigger decision points, the ones that matter, they're the closest. And then we go to step number two. What has price been doing over the last week or two? Well, we had the blow off top like the S&P, and we've been making lower highs and lower lows right here. And we've got this trend line in. And then we come in step number three. What is price telling us, where price in relation to the previous day's range? Well, previous day's high, low, midpoint. What is it doing? Well, we know that it couldn't break above. And then look at that. Overnight traders had a big trend line from the week in the top third, break, retest, rejection off the previous day's close, and a trend line. Doesn't get any better than that. I mean, really just a nice trade. And again, where are our favorite trades? Context 2, top third, bottom third. Context 3, fake out breakouts of the previous day's high low. Context 1, making obvious bullish trend above or bearish trend below. Again, if you don't mind trading the weekly because you've back tested it and it has space of 2 to 1, no problem. Now, for me, looking at the NASDAQ, the overnight traders had some really nice trades. Now, right here, you did have some trades right here. This happened before the market, and this one happened right here. Again, if you're an afternoon, if you don't trade in the afternoon, then you would have missed it. At Trade90X, we like to use a 3-hour window. Usually we're doing our pre-market between 7 and 8, usually around 8 o'clock, unless we see something just so fantastic. We take a break until about 8:30, and usually 8:30 till 11:30 is our sweet spot. And then I usually tell people that are newbies, wait till about 9:45, 10 o'clock, let the first 15-30 minutes come out, let the market show its hand. Until you've proven that consistency, these are always our recommendations that we give people, especially also and they go through the sim period. So right here, these were potential setups. And again, I don't really like these setups, but again, we ended up the day as a neutral day on the NASDAQ. Overnight traders got some very nice setups right here. And then if you were an afternoon trader, again, this was not a bad setup. Let's go to the YM. Again, what are the steps? Let me start from scratch. Go to that weekly, monthly chart. Step number one. Again, this is a rinse and repeat process. Where was price where it paused in the bigger time frame and reversed quickly? Again, these are just decision points. They're not holy grail or anything like that. Just price where price took off quickly. Go back to that 10, 15-minute chart. We've got our bigger decision points. Step number two, look left. What is the last, week or two looked like? Well, we were making higher highs like the rest of them, blow off top. And the Dow, no different than what we've seen so far. We've got a trend line in there. And then step number three, what was price telling us when we came in? Now, remember, we're usually starting around 7 o'clock doing our review. So what was price doing when it came in? So the overnight traders had a beautiful setup. I mean, you were in the top third, you had a trend line, you had the opening range, you had R3, the previous day's high. I mean, really just a beautiful setup. You put your stop above here. I mean, really just a beautiful setup. Price gave you more than 2 to 1. And again, what I always tell people, until you've proven your consistency, every new trader takes off at 2 to 1 until they have 3 to 6 months of proven consistency that they have executed with an edge. And when they do that, then only can they have earned the right to then go for bigger targets. So right now, this is what I was talking about. Like if we're doing a review and I see something like this, price is in context number 2. Now it's in context 4, no edge, but then we broke right there. Now, I don't usually like taking breakouts. Me personally, this is just me. You got to back test it. I want to see like this. We got the break and retest down. And again, I don't know what time this is going to happen. All I can tell you, this is one hell of a setup that happened in the afternoon. I mean, as good as it gets. I mean, really just a beautiful, beautiful setup. It was a bearish trade. Remember, where is price? We started inside, proved below context. We were in context number 2, we turned into context 1, and then we got that break and retest at the previous day's range low to confirm. Really, really nice setup. And listen, there are going to be days where you get 5 setups. There's going to be days where you get 1 setup, or you get none. It just really depends. We have no control over that. All right, Russell. Again, I want to show you a bunch of symbols, so make sure you get it. Now, also on the weekends, and stay tuned, I do a separate video for people in the community because we get people that want to trade stocks. I do what's called our Trade90X watch list edge scan, and I quickly show you how to find bullish and bearish stocks with an edge and how we trade them with an edge. Okay. So step number 1 in the 4 context situation, Trade90X strategy. Where did price pause and reverse quickly for potential decision points? That's all this is. Go back now. What is Russell doing? It's basically been bearish and more of in a range. It's not like the other indices. So now let's go back to the 10-minute. What's been going on in step 2 over that last week? Pretty much the same, lower highs, lower lows. Definitely have a trend line in right there. And then step number 3, when you come in, again, right around that 7 o'clock when we're doing the review, price was already in context 1 bearish below, making lower highs, lower lows. We started in the middle, context 2. We had that break. Listen, I love this. Really nice trade for overnight traders. You had the break, retest, and then look at that. 1 try, 2 try, down. I mean, really, it doesn't get any better than that. Entry right below there, stop above. Really nice. I mean, it really doesn't get any better than that. And right here, this would have been the only other setup that I would have liked because, again, we're bearish. And then again, what I'm looking for is, when we were here, what I was really looking for is 3 trades. For me, you get the break, retest. Didn't quite get the retest I'm looking for, but it came in that area. That's 1. Number 2, I would have loved to have seen this. We break below the weekly, 1 try, 2 try, and down, or we get the change of personality from here. We get back in. We go from an outside bearish day back to an inside neutral day. 1 try, 2 try. What was resistance becomes support off the previous day's range low, and we're looking at the middle and top. All right. So Russell closed on a bearish note on going into Friday. Let's go look at a few more. Again, I want to show you a few asset classes so you can see this works on all asset classes. Go to that weekly and monthly. What is oil doing? Well, it's definitely looking more bearish to me. Lower highs, lower lows. Again, put in those areas where price paused quickly. Kind of in a range. This area right here. And we got, again, and we're kind of in this tight range. Now, let's go to the anchor chart. What's been going on over the last week? Go to Monday, and we can see that we were basically in a range. And remember, ranges act like magnets. So a lot of times what will happen is when you have a range, just box the area, top, find the tops and bottoms going across. And a lot of times what will happen is exactly like this. you'll get that double top and fade. Now, if it was going to trend, it would have done something like this. It would have broke above this weekly previous day's high, one try, two try, and off to the races. That's not what it did. And then look what happened below the range. And now we're fading back up. All right. So basically we had a bigger range, and the price is acting like it does in a range above and below. It's looking to fade back in to the range. So what was it when we came in here? Again, we're usually in here around 7 o'clock looking at our review, and look at what we had. We were in the bottom third, but then the traders, beautiful, had a beautiful short right there. And then they got another short right here, and we got a really nice trade right there. I mean, really nice trade. Now, definitely, I will say this, whenever you get that big move down and you hit a key level, and you got key levels like right here, you have a, look at this, you got a weekly, monthly, and you had one of the big decision points, and you get something like that, that is definitely a counter trend trade I will look at. But again, you need to back test it to see if it fits your plan. Okay. Now, if this trade would have happened earlier in the session, this was a nice setup too. We went from an outside bearish day back to a neutral day. We had the break, retest, rejection. But again, this happened in the afternoon, so I'm not trading in the afternoon at this time. But again, I'm just pointing out the setups. We have no control when they happen. Okay, gold. Again, I'm looking at the symbols. Again, we're going to go to the weekly and monthly. We're going to determine where is that main trend. Well, you can see we're in a range. It's pretty obvious. Okay, we're definitely in this bigger range right here. Definitely in a bigger range right here. Definitely in a bigger range right here. And then we've kind of gone above and below. And what's happening? We're definitely a little more bearish. So what I'm going to do is, where did price pause? And let's move those down. Pause to move quickly. Pause to move quickly. These are the most immediate, because remember, we update these every day. And then we go to our anchor chart. We look at step number 2, what happened over the last week from Monday. We are definitely been in a downtrending mode. There's no doubt about that. And then we come in step 3. And again, remember, we start around 7 o'clock. Now, remember, commodities, things like that, these guys open around 8:20, but we are looking at 7 o'clock. And again, where is price in relationship to the previous day's range? Well, wow, man, gold gave you some setups. If you guys, I hope you guys see this. Look at that fake out breakout. It hits the monthly, comes back, momentum, break, retest, rejection. We call that, the fake out breakout context 3 trade. I mean, it doesn't get any better than that. I mean, wow. And then look at that pump up and then dump down. Again, this was at 9:30. This is another fake out breakout. I mean, look at that beauty right there. And again, if you shorted this right here, right below here, stop has to be above structure. And this trade, we're looking to go from one side to the other. And this gave you 2.78. Now, one thing, whenever you do that, we're always looking for go from one side to the other. But if we did something like this, say you're in profit, and now we start doing this, you take your profit, you didn't quite hit your target, but you took a smaller profit and you're out. Okay. And again, this will, when you're involved with our process, these are things that you learn. But gold, man, wow, look at those setups. I mean, all you need is one good setup per day and you made your day. I mean, beautiful. I mean, beautiful, beautiful setups. Let me show you 2 more, and then we'll end this video and get ready for our scanning video. So first, remember, this is the euro. Let's go to the weekly, monthly. Tell me what's going on. Well, it looks like now we had this bearish leg, but now we're in a range. It's pretty obvious. Okay, and until we break out of this range, here were the areas kind of where we had our pause and it took off. Let's go to the 10-minute so we can do step number 2. What's been going on over the last week? Here's your weekly level. And we can see even the week before, we were making higher highs, higher lows, and then price went into a range right there. And then again, what do you do with ranges? Make a box. And then remember what I said. Many times with ranges, you'll see double or triple tops above and below, and price will try to fade in. Remember, if price is going to go from a range back to trend, it would have done this. It would have broke this monthly, 1-2 try, and off to the races. That's not what it did. And same thing down. This is why I love whenever we break above the previous day's range, I love those weekly, monthly, yearly levels. They really, really, but you got to listen, these steps take time. Okay. It's not easy, but again, we show you the steps and we give you the support to expedite it. Again, I'm showing you this 4 context situation. Step number 1, the monthly and weekly, determining trend and understanding potential bigger decision points. Steps number 2, what's been happening over the last week or two? Is price bullish, bearish, in a range? Number 3, where is price in relationship to the previous day's range when we came in? Well, remember, we're coming in right around 7 o'clock to do our pre-market. And look what happened here. Here's your previous day's high, low, midpoint. And here's your S3. You had a beautiful break and retest right off the S3 right there. Beautiful trade, short. And then we go from one side to the other. Okay. And again, this trade right here was counter trend. So again, if counter trend is not in your back test, then you didn't consider it. But that was a beauty for the overnight trader. The European traders, London session, man, they scored on that euro. Now I'm going to show you one more, and then we're going to end this because this is already taken long enough. But again, this is Bitcoin. Again, I don't care what you trade, Apple, Bitcoin, doesn't matter to me as long as it's liquid. Again, what is the monthly and weekly telling us? Where is price showing potential areas where it's paused and took off? Right there. Again, these are just potential decision points. That's all they are. Again, we could blow right through these, but you'll be amazed at how well these work. Well, right now, Bitcoin is definitely, we had that bearish run, but now we're starting to make higher highs on higher lows. You cannot deny it. Okay, let's go to the 10-minute anchor chart. Now, you're somebody that wants to day trade Bitcoin, no problem. I don't care. What has the price been doing over the last week? It's been making higher highs, higher lows. Then it's gone into a range. Remember, you have to be able to understand what bullish, bearish price action is in a range. So bullish price action went into a range, and now we've got some key levels above. So if we're going to break this range, we really want to see this go up like that. If not, then we have to respect the range above and below until it really starts trending. So again, we come in right there at 7 o'clock. And unfortunately, we had this bigger range down here, but then price basically was in a context for basically the whole session. There was really nothing to trade. It is nothing to trade here. Again, this is the difference between a professional and amateur. The person that understands that there's a clear context, number 1, what it means, there's a clear context, number 2, what it means, the setup, clear context, number 3, they know what it means, or there's context 4, there's no edge, we sit on hands. Are we clear? Excellent. So let's recap, and then let's get ready for the weekend. Enjoy the rest of our weekend. So first thing we always do, we looked at the news, we looked at the fear and greed index. We looked at how many stocks were above and below their 50 to get the breadth of the market. I want to know what that short-term momentum is. Looking at the sectors, definitely a little more weaker. And we know the long-term trend is definitely up. And then here we know that we're getting a little bit of a pullback within that bullish run. So for me, what we talked about is how then we break down the charts. I showed you how we break down the main trend. The main trend is a great way also to get confirmation from the commitment of trader reports right here. The intermediary trend going from our weekly, and let me just put that back in right there, going from our weekly down to our 15-minute, and I showed you how we break down the weekly, and then I showed you the swing trades that I'm looking for in the 4-hour chart using the methodology, and I showed you 4 trades. But until we get there, there's nothing for me to do. So then I showed you again, out of necessity from a lot of listening to my my clients and stuff, saying, hey, I want an easier process. I want one chart. I want to come in, exact steps, something I can back test, journal, and really get this down. And I showed you the 4 context situation strategy. Again, looking at the ES, step 1, looking at the weekly, monthly for trends, and then, potential identifying the decision points. Step number 2, what have we been doing over the last week? Step number 3, where is price in relationship to the previous day's range? Are we above, below, or inside? Above and below, again, is context 1 for bullish trend. That's where we'll consider faster swing trades. And then if price is inside the range, we're looking for context 2 and 3, neutral fade trades. And then if we're in context 4, where there's no edge like here, we do nothing. We either wait for the symbol we're trading to turn into a context 1, 2, 3, or we go to another symbol that we're looking at and we break it down. Everything we do is about process. If price does this, we understand how to do that, and we prove it in our back test that shows that we either have a statistical edge or we do not. And until you've proven you have a statistical edge, you have no right to trade live. Okay, so we understand right now that we're still bullish, but we're definitely seeing a little bit of weakness. So for us here at Trade90X coming into, now we don't trade Sunday, we'll trade Monday morning. We'll be looking to day trade our symbols. Again, we trade the indices, whether they're futures, or we'll trade the indices like SPY, QQQ, IWM, Russell, and then we also trade the futures of it. And then we'll also potentially look at some Apple, oil, or gold. And again, we're going to trade the chart that gives us the best opportunity to make money. But this process right here quickly breaks it down. So if there's anything you didn't understand about the information, how we broke down the charts, how we break down the faster opportunity with the 4 context situation strategy that I just showed you using one chart, please hit us up at hello@trade90x.com. I want to make sure you get this. So enjoy the rest of your weekend and trade safe, and we'll see you Monday morning.